You mute. Okay, now I'm unmuted. Thanks, Robin. And first of all, a big welcome to everyone who's with us today. Thanks for taking time out from your busy schedules. I'm Josh Zinner. I'm the CEO of ICCR. I know many of you. We're thrilled to be co-hosting this webinar today with the Diverse Investing Collective about how we, as asset owners and allocators, can use our influence to increase the numbers and power of women and people of color who have meaningful influence over the flow of capital in this country. ICCR, as many of you know, is a coalition of faith and values-based investors who are concerned with aligning their institutional values with their investments, but also, of course, while fulfilling our fiduciary duties to clients and beneficiaries to ensure that our investments are sustainable over the long term. And we know that the people who make investment decisions have a lot of influence over whether investments lead to long-term sustainability and healthy systems, which benefit not only the entire portfolio, but also the well-being of people and planet. So who is managing our money matters. What the Diverse Investing Collective team will share with you today is how to take a closer look, not just at how our money is invested, but at who is investing it. The reality is most of those who manage assets look the same. And this can limit creative new ideas about how to invest our funds in ways that support healthy systems and are aligned with our values. We want today's call to be conversational and have saved time at the end for your questions and comments. So please be ready to chime in with any and all questions. We'd love to have everyone on the call introduce yourselves in the chat if you're willing. Please provide your name, your organization, and one word, if you can, describing how you're feeling about the topic of today's webinar, how to diversify who manages your money. Finally, I want to put today's conversation in the broader political and cultural context that we really can't escape. We've all heard and seen the recent pushback against diversity, equity, and inclusion by many of the same organized political actors who are opposing any and all progress by corporations on environmental, social, and governance issues. This has taken the form, of course, of attorney generals sending letters threatening companies with reverse discrimination lawsuits based on their DEI initiatives, and other attempts to intimidate corporations from moving forward on these critical issues. And we as investors, of course, have a fiduciary obligation as well as a moral obligation to push back. The anti-DEI voices are very loud. So again, for those of us who believe in diversity, we have to speak out. We have to remain unbowed and moving forward and not backward on fundamental issues of racial equity and justice. You'll hear from the Diverse Investing Collective today on ways to do just that. So with that, I'm going to hand this over to Ruth Shaver. It's an honor to introduce Ruth, who's president of the Terra Health Foundation and a co-founder of the Diverse Investing Collective, to share more. So Ruth, over to you.
Thanks so much, Josh. And thank you so much, Josh, and to the entire ICCR network for sharing the passion and interest in this work. And we're really grateful for this opportunity to co-host this event with you. I just want to give you a really brief background on why me and why this work was so important to me, and give you a little bit of a background on the Terra Health Foundation and the origin story for the Diverse Investing Collective. First of all, I'm a physician. I had my career at Kaiser Permanente, both as an OBGYN and also as a senior executive. And it became clear to me in my career, number one, that women and people of color were at the center of the change and the innovations that we needed to see in that case in healthcare, but also in the world at large. And it also became clear as I battled for budgets and battled for grant money that who controlled the capital was essential, and that if we really care about changing the system, we have to change who's sitting in the seats and who's making the decisions about which companies, which innovations, which work gets funded. So that's where I came from. And when I started Terra Health Foundation, I continued that work. My focus on gender and gender in finance led me to write a book called The XX Edge. And in that book, we outline all of the evidence that really proved the case that when women are sitting in financial decision-making seats, better things happen, both financially and socially. And that evidence at the time was so strong in gender, but even since we've published the book, there's been so much more evidence that's come out that supports a broader diversity in how it drives performance, and certainly racial diversity. It's really clear that the same rationale for why women need to be in these seats is true for people of color as well. And that's what really put the wind in our sails to launch this diverse investing collective. And I just want to also say that as we started this work, we did a landscape assessment and acknowledging Robin and her tireless work to really uncover all of the great work that's been done in this space before us. And we really are standing on the shoulders of those giants and want to make it clear that we didn't start this work. We're just trying to amplify it. So Robin, if you go to the next slide. So what are we doing at the Diverse Investing Collective? We think that obviously that what gets measured gets done. Our goal is summed up in 33 by 33. I've got my pin here, if you can see it. 33, we want to see 33% of assets. So the denominator is dollars. 33% of assets managed by gender diverse and racially diverse portfolio management teams by 2033. So 33 by 33. So first of all, we're looking at AUM, not just the numbers of people in the seats. We really want, because we know that how much money people manage is actually the best representation of power and progress. We know that these numbers, that in terms of the numbers of people in these spots, both women and people of color have been stuck for 20 years, and they are much, much lower than the representation in the populations that they're serving. We also are focusing on portfolio managers. We know that many of you on the call and many folks have been very interested in diverse ownership of funds. And we think that's really important, and we applaud all that work. At Tara Health, we've also been focused on that. But we think that portfolio managers have been largely hidden, and they are really the power brokers, and particularly in the biggest firms and in the public markets, those are the folks who really have all the power. And so we have three pillars of action. Maybe the next slide, Robin. First of all, we're calling for transparency, and you're going to hear a little bit more about how we're doing that. But we believe that if this information stays hidden, that we're never going to be able to make progress. So our first call is for transparency. And we also want to see some accountability. So we're launching a dashboard, should be out any day now, that will allow us all together collectively to track our progress towards our goal of 33 by 33. We also are focusing on the public markets, even though we know that private markets are also super important. We want to start in the public markets, and hopefully as our work and our dashboard and our coalition grows, we'll be able to expand to the private markets soon. We know that this is a demand side strategy. Just like any market force, the people who supply the products really aren't going to change what they do. They're comfortable, they're in their status quo, until folks like you all, people who have the control, who either asset owners or asset allocators, demand change. We've had so many conversations with the big firms, and they all say the same thing. Yeah, you've got a great business case. Yeah, it sounds good. Yeah. We've got a little DEI program going on over there, but they're actually not going to change what they do. They're not going to be interested in changing culture. They're not going to be interested in retaining this talent unless their customers, and that's you all, demand it. So that's the focus that we're stressing, a coalition of asset owners across high net worth individuals, foundations, endowments, public pension funds, to demand this transparency and ultimately to demand diversity. So you'll hear a little bit more about our pillars of change and how we're our strategy and how you can get involved in regards to as a coalition of owners. And then the last part of our strategy is around changing the narrative. We're working with a PR firm to stand up stories, because we know that's actually what moves people. We want to capture the stories of investors who are doing this work already and seeing excellent performance. We want to make it clear this is not a concessionary approach, that this is actually a way of having the best innovation, the best sustainability, and it's the savvy business strategy for all of us. And by the way, we also get great social impact, and we also create great, really well-paying jobs for folks who've been left out of this industry for a long time. So with that, I think I'm handing things off to Ivy to introduce herself and to share a little bit more details.
Thank you, Ruth. First, let me introduce myself. I am the Senior Advisor for the Diverse Investing Collective. Prior to this role, I was the Chief Investment Officer for North Star Asset Management. And prior to that, I was an institutional investor ranked analyst at Lehman Brothers, which then became Barclays. So to quickly frame what you are going to see, let me just say, in my prior career working at what I would call a traditional asset manager or our investment bank, early in my career, I was told, we don't talk about politics at work. So now imagine when I joined your community about 10 years ago, and this is after Citizens United, and I was kind of gobsmacked to learn that a lot of you have been working on getting public corporations to be clear about how their political contributions were in line with their stated missions. And I remember scratching my head and thinking, but I thought we weren't supposed to be talking about politics at work. And so now you have this group of investors, like-minded investors of ICCR who've been doing this work to push corporations to be clear about how their political contributions are aligned with the company's mission. And there were other topics that we were also talking about. So for me, I will tell you, it was kind of an aha moment in the sense of thinking about, okay, hold on. This is not just about investing money, or in the case of public markets, it's not just about selecting stocks, but we're also dealing with a group of individuals who are also managing our money, but at the same time, they have a bigger influence on factors that impact society. And so that is when it was very clear to me that, fund managers aren't just fund managers. Fund managers are also people who are having daily interactions with public company CEOs. And through those relationships, they are influencing, politics. So not just funding, but, who companies might actually contribute to in terms of politicians. I also learned that, they also had a role in terms of even when we went through the Me Too moment, in terms of looking at how proxies were voted afterwards and seeing that some of our largest financial institutions, while the Me Too moment was going on, was voting against shareholder proposals that were asking for companies to be more diligent in ensuring that there was workplace safety. So again, I think for me, it was a little bit kind of an enlightening moment, can I say, to see that again, folks we consider to be just managing our money or actually doing more than managing our money. They were also shifting how our society worked and also having, I would say, a hand in terms of shaping the values of our country. And actually, if we, are really clear, also impacting how our democracy works. So that's really the background for this video, is to help not just people like us, but other people understand that fund managers aren't just managing money. Fund managers really have another role in terms of shaping our society. So Robin, can you play the video?
Great. Tee it up here. Two-minute video, so not too long.
Do you know what your money is doing while you sleep? Whether you have a 401k or pension, a college savings account, or oversee an endowment, your investment money is hard at work, even when you're not. And while some of us have begun looking into how our investments impact the world, very few of us have dug into who is managing our money. We just want it to keep growing for when we need it. But if we care about making our world a better place and making good returns so we can retire or grow an endowment for future investments, we need to understand who is pulling the levers in the investment machine and how their decisions affect financial and real-world outcomes. While investors like you actually own the money they invest, fund managers at asset management firms are the ones making most of the day-to-day decisions about where to put those assets. This gives them immense power to decide which companies get funded and which ones don't, as well as strong influence over how companies approach important societal issues like environmental impact and labor practices. The issue is that most of today's portfolio managers pretty much look the same, male and white. Research shows that when everyone on the team is the same, it can lead to groupthink and worse decision-making, while teams with a more diverse mix of genders, races, and perspectives can lead to better investment performance. Fund managers with more diverse backgrounds, such as women and people of color, will see challenges and opportunities missed by a group who has not walked in their shoes, allowing great ideas to lead wherever they might originate. Your investment money is always at work, but it can be even more productive for you and our world by adding more diversity behind the controls. To learn how you can take action to change the face of finance, increasing financial and social returns, visit www.diverseinvestingcollective.com.
Thank you. So I also just want to be clear that, we say, we want to make the easy thing to do the right thing to do, that it's really important. So Robin, I don't know if we can put the slide back up that shows that really there is a business case. And we always typically start the conversation by looking at the business case. There are many studies at this moment in time that speak to the importance of diversity and the social benefits that come from that. But these are some studies that we want to call your attention to so that when you are making the case, these are some studies that you can look at and reference that spell out in terms of an investment context, what it means to have a diverse group of fund managers. So in the case of Vanguard looked at 2,600 active equity funds from 2008 to 2021. And what they found is that mixed gender portfolio management teams outperformed all other teams and the benchmark by 47 basis points. So again, to be clear, this is not just, the nice thing to do. This is really about doing the right thing in terms of, as investment advisors and asset managers, we have a fiduciary obligation to our clients. And so this is really something that we need to be really clear about when we are doing this work and talking about this topic. To begin with, saying, there's an actual business case, that this is, again, not the nice thing to do, but it's actually the right thing to do. So with that, I'm going to turn it over to Robin.
Thanks, Ivy. Okay, we are almost done talking at you because we actually want to hear back from you. But before we do, you're going to hear from me and then you're going to hear from Lucas about just getting really concrete. Like, what does this mean and what can the folks on this call today do to actually move the needle on this? Because we know it's a huge problem and we know many of you are taking action, but we have one more idea we want to share with you and we hope we'll get you excited today. So what Ruth outlined at the beginning, our theory of change at the Diverse Investing Collective, is that the people on this call, asset owners and allocators, have the power to call on the teams managing your money to change their behavior. And so we are a data-driven organization, as Ruth said at the top. And so we took a look. We looked at the NASDAQ investment database, which is mostly public funds, but it's the largest database of public funds. They have over 8,000 funds in there. And we wanted to see, because they have a diversity and inclusion survey where they collect race, ethnicity, and gender data amongst some other diversity metrics on those funds. And we wanted to see, well, which of these funds, what percentage of these funds are actually providing the D&I data to the investors who are investing in those funds. And we found that 68%, you can see it in this chart here, of funds in the NASDAQ investment database are not providing racial and gender data. So that's a problem, right, for investors, because that means most of us are flying blind. Now, of course, many on this call probably send your own diversity surveys, and we think that's awesome. Please keep doing it. But what we're really interested in is making sure that the diversity data also goes into a central database So it can populate that dashboard that Ruth was talking about, so we can see across the entire investing ecosystem, and we can really start to wrap our arms around not just how many women and people of color work in the industry, but actually how much money are they managing? Because for us, that's a proxy for power. So we did a little snapshot. We looked at the top 20 largest asset management firms, and we found that at 14 of them are not disclosing their diversity and inclusion data in the NASDAQ investment database. Now, the good news is that 6 firms are providing it for the majority of their funds. And I want to be clear here, some of these are providing D&I data at the firm level. We think that's great. But what we're really asking for is for this data to be disclosed at the fund level. And the reason for that is exactly what Ivy just outlined, which is that we know that there's evidence that cognitive diversity can outperform. And so these are teams that if they are all homogenous, they may be underperforming, they may have blind spots, they may be subject to groupthink. So we're really interested in those portfolio decision makers and the makeup of those teams. And we think all investors should be as well. So 6 of the firms are completing this. So we know it can be done. And we know many of the pushback and the claims about privacy and so on probably don't really hold water, because in fact, 6 of these large firms are doing it. And this last bullet point here is just, again, speaking to the importance of having a central database. Okay, so where do folks on this call come in? We have a transparency sign-on letter that we're circulating. Actually, I'm really delighted to say a number of you on this call have already signed, so huge thanks to you. We have some logos up here. Church Investment Group, Westpath, who you're going to hear from in just a moment, why they signed, Pension Boards, United Church of Christ, School Sisters of Notre Dame, Sisters of St. Francis, and you can see a whole host of organizations, Nathan Cummings Foundation, Robert Wood Johnson Foundation, YWCA, Sierra Club Foundation, some institutional investors, the Seattle City Employees Retirement System. So we've got 44 signatories with about 62 billion and counting. We have more signatories every day that we've been collecting, and we're hoping everyone on this call will sign as well. Because what we're hearing from the firms is that reaching out individually and sending individual surveys is important, but actually acting collectively and showing that there is a coalition of investors who all want to see this data and all want it to go into a central database to improve accountability, that is really what is going to get these investment firms to change their behavior. And again, you can't manage what you can't measure. So first step is getting transparency. We don't want to stop here. We want to be clear. We want to move to the next step. Once we get this, we need to be calling for more diversity and figuring out what are the barriers to getting people into these positions. But with that, I'll pause for a minute and then I'll hand it over to Lucas to share his perspective from Westpath.
Great. Thanks, Robin. Thanks, everyone, for having us on the call and the content so far. So I'll introduce myself and then talk a bit about Westpath's diversity initiatives and somebody signed on to this transparency letter. So I'm Lucas Schepner, Manager, Sustainable Investment Stewardship at Westpath Benefits and Investments. We're one of the largest reporting faith-based investors in the world, with about 26 billion under management. And over the past couple of years, a lot of our diversity-related energies have been put into the Midwest Investors Diversity Initiative. It's about three-fourths of $1 trillion in AUM that focuses particularly on Midwestern companies that are lagging on board diversity and getting those diversity numbers up, as well as improvements to their hiring processes. But the asks have kind of evolved over the past couple of years. So where we started off with some more basic asks like the Rooney Rule and hiring and thresholds below the 33% that you all are aiming for now, so we kind of realized that some of the same limitations that you were talking about, Robin, when it comes to going one by company or manager, and started to also, over the past few years, as asset owners, engage the asset managers too. So we've been talking to asset managers like Capital Group and Dodge & Cox about a lot of the asks that your group is focused on. But even there, we're still finding some of the same limitations, like where the conversation has moved beyond the Rooney Rule and hiring to, okay, are you willing to disclose diversity amongst investment decision makers? But now being able to sign on to the transparency letter that you all have been promoting, that really just it hopefully gets a lot of managers on board all at once. And to me, when it comes to an engagement priority, if the simpler to ask, the better, and the more it saves everyone time, the better. And this seems like a very straightforward ask to those requirements, because as you say, a lot of managers or asset owners are already asking their managers about disclosure on different diversity metrics. But the more we can make this just a standardized framework that everyone takes for granted, the better. And interestingly, I like that you guys are focused on the public markets right now, because I feel like usually when it comes to ESG related disclosure, companies lead, and then it's the private markets that follow afterwards. But in some ways, it's been at least in my experience, a little bit reversed this time around. Like with the ILPA framework for diversity disclosure, it seems like that's very quickly become the industry standard for diversity disclosure in the private equity market. And I'm surprised at how quickly that took off. But now it seems like we can take that good standard that now everyone takes for granted, and hopefully make public managers also just disclose along the same standards too. So I'm really glad you guys are pushing that initiative. There's some other exciting stuff within Westpath too. Like we've got an incoming CIO, Johara Farde, and she was telling me just a couple weeks ago that the most proud part of her career was when she was at her previous role, kind of making that business case for the anti-groupthink point. I mean, that's really what it all boils down to. You guys laid out very compelling stats behind why diversity improves investment returns. But she was able to convince a major Illinois pension fund that, yeah, hiring diverse managers matters because it reduces groupthink. So anyway, so there's I know my colleague Chirag is on the call too. There's some exciting momentum here internally at Westpath on the diversity side. And we've also been, over the past 2 years, improving our asset manager selection and ESG monitoring process. We've been bringing in more diversity metrics into that. So if anyone is worried about signing on to the transparency letter as, maybe agreeing to incorporating everything that eVestment puts out in the database out there, we don't see it that way. We just know that the framework that you all have gotten eVestment to work on getting disclosure from managers, there's a lot of good data in there. We'll incorporate a lot of that into our asset manager monitoring process ourselves, but we've still got the freedom to deviate where we think it makes sense. But just to have that consistent ask across well over a dozen managers really makes that engagement we're doing one by one on asset managers so much more accelerated, I think. So really appreciate the work you all are doing on this, and thanks for having Westpath as part of it.
Thank you. So with that, we have a slide that says Q&A, but maybe I won't pull it up. We really just want to open it up to the group and ask, does this group have questions? Again, the letter it's addressed to the 14 firms, largest firms. Again, I'm happy to list who they are here, who've not provided the diversity inclusion data for their public funds in the NASDAQ eVestment database. And the call to action is really quite simple. It's just, we, the following asset owners and allocators, would love to see you guys fill this survey out, so that we and other investors in these funds can just quite easily see this data, and so that groups like the Diverse Investing Collective can download it, at least in aggregate, to understand how much AUM is actually being managed by gender and racially diverse teams. So I'll just pause there for questions or comments about the letter, about the strategy. What are other folks doing in this space? Things we can learn from you. We want to make this conversational, and everybody should be able to unmute themselves. You can also type your question in the chat.
Hi, can everyone hear me?
Yeah, Minoti, we can hear you.
Oh, great. So my name is Minoti Dhanraj, and I'm Director of Responsible Investing at the Pension Boards, United Church of Christ. And this initiative, it just came at the best time for us because we just created a DEI and B policy. and a background paper that really goes into everything that you all were talking about earlier in terms of it not being concessionary, that you actually get better returns by investing in a diverse group of individuals. And, one of the things that we did a couple years back is started a survey of our managers, and we kind of piggybacked off of our consultant, and they weren't able to get all the information that we were able to get by going directly to the managers. And a process like this and getting, on the e-investment database to have that information accessible, like the 3 points that you noted in terms of the 3 challenges. One, it's only seen by us, right? Whoever's handing the survey to the manager. The survey fatigue, the fatigue on the manager's side, but then also our side, we have a 4-person investment team. So collecting that data is, takes quite a bit of effort. And then having that centralized database is really important, because then we can just tap into it while we're having these discussions with the managers. So we constantly have discussions with the managers in terms of their goals and targets, and how they're changing their landscape in terms of diversity, equity, and inclusion. But having access to this type of database would be, extremely helpful. And then one main thing that I've kind of seen across, this space is a focus on diverse managers, investing in diverse managers, but not looking at the larger asset managers in terms of what they're doing, because they actually have a greater influence on the market, right? And manage a lot more assets overall. So I think this is a great initiative that you all are putting in place.
Noti, we need to hire you. You said it better than we did. The 3 challenges with having everyone send their own diversity surveys, and the need to really focus in on the big firms and not just sort of the smaller, diverse owned firms. So thank you so much for signing and for your words. Does anybody have any additional thoughts on what Minoti just shared? Does this resonate with you?
Yeah, well, Robin, one thing that Minoti mentioned that I don't think has come up yet is that, yeah, if we're all kind of on the same page of what this disclosure looks like, well, my understanding is that eVestment there's plenty of stuff behind paywalls in today's world, but this, I understand, is not going to be one of those things. They're going to make this info publicly available for anyone, right?
That's right. The one caveat to that is they are committed to making it available for free, all of their D&I data on any fund to any accredited investor.
Gotcha.
So it's not technically public, which actually we've had a number of conversations with the firms who the letter is addressed to, and they're quite nervous about making it public, but there is more comfort with knowing that it would go into a central database where investors could see it. So anyone invested in the fund can see it, but anyone can get a login for free. And if you need instructions or you want to get into the NASDAQ eVestment database, we have a toolkit, an innovative investor toolkit we're working on. We're super happy to share those instructions with you, and you can get in there and kick the tires yourself and see what data is in there. And you'll see, unfortunately, that most of your funds probably haven't reported the D&I data. I mean, 68% of them have not, we know, so. Other questions or comments? Would it be helpful to see the survey to see what questions or what the data looks like? Okay. I put a link in the chat where people can go to read more about it. You can request a copy of the letter. You can sign on right away. Hopefully, maybe you're good to go. Yeah. Gina, I want to answer your question. Is the Diverse Investing Collective have a diversity inclusion survey that can be shared? Super. Let me share the link to the D&I survey. I'll also share my screen here so you guys can see. The main thing that we're interested in, the main piece of data, it's really this chart right here, if everyone can see. Is really the portfolio management team, female, male, non-binary, state to decline, and then you've got races and ethnicities here on the left with also the option stay to decline. And so what we'll be measuring on our dashboard is what portion of AUM for each team is actually managed by gender diverse and racially diverse fund management teams. And you can see there are other questions here too, but to be candid, it's actually a relatively short set of questions that really should not take a team more than, 30, 45 minutes to complete. So it's actually not nearly as detailed as the OPA survey, but I did put the link to it in the chat. Does that answer your question?
Yes, thank you. I was actually typing it as you were asking if anybody wanted to see it. So
Oh,
thank
perfect.
you so much. Yeah.
Thanks, Gina. Does anybody have any concerns? Maybe we should ask that. Anything in your mind that you're thinking to yourself, no way would we sign this letter, or this is just, here's what I'm going to hear from my, leadership if I try to pitch this. Anything we should be aware of, pitfalls we should try to avoid?
Well, Robin, one thing I've heard from other groups who've considered signing on to the transparency letter is, I kind of alluded to it a minute ago, but there was a misconception, I guess, that signing on to this means, now we're swapping out everything we've already got in our ESG manager assessment on DEI with this instead. And at least the way I say it, like I said, yeah, that's not the case. This is going to make disclosure easier for everyone, and you can pick and choose what you want to then incorporate into your own framework. So that's
such a good point.
Yeah, I think that's a fairly minor obstacle that just requires clarification, but that's one thing I've heard. I'd also be curious to hear from your all's end any reaction you've gotten from managers to whom you've already reached out about this.
Thank you, Lucas. Yeah, I think that's a really important point, that just because we're asking managers to complete this data, which, just to be clear, in the NASDAQ investment database, these funds are going in and they're providing dozens of data points on a quarterly basis about all sorts of things, performance and track record and updating staff. And so for us, this is about making diversity data on par with other key data points that these funds are providing. So trying to really make this equal billing, across the board. I will say we've had some interesting calls with the firms who are named in the letter. I would say the number one response is that they claim to not want to disclose. They want to protect privacy, is the number one argument we hear. But of course, the survey that I just showed does not assign race or gender to individuals. It only shares it at a team level. And interestingly, there are 3 firms, and this is highlighted in the footnote of the letter so everyone can read who they are. There are 3 firms that for 2 years did provide the D&I data for the vast majority of their funds. It's not coincidental that it was after the murder of George Floyd in 2021 and 2022, and have since stopped doing it. So now, some of these folks are claiming that it's because of privacy, but 2 years ago, privacy was not an issue. So when kind of pushed on it, I think what we're hearing is that this is part of what Josh highlighted and part of what Ivy highlighted, which is there is a shifting political landscape. And when asked what would get them to start disclosing this data again, they said very simply, we need to hear from our customers. We need to hear from more of our clients. And if you guys can build a big enough coalition of investors who feel that this data is valuable and material to their investment decisions, we'll do it.
And I know Josh knows well the backstopping we've been trying to do against this. Yeah, the rollbacks of disclosure, things like that over the past year or so. But if you're okay with mentioning, Robin, are there a couple managers that stick out as ones who have backtracked the most that we should be paying attention to?
Yeah, this is in the letter. Let me just pull it up here at the bottom of page 2. Go ahead.
What I'll also say is the work of the collective is really systems work, and I think that is so important. And so I would hesitate about naming individual firms because we don't want to be distracted. this is about the system as the whole. And so I just don't know if it's constructive to name individuals when it's about really trying to restructure the system. And so again, we could name names and look, there's nothing stopping you from quickly figuring it out. But again, for us, this is systems work. And so I think it's really important for us not to get distracted with individual firms and to stay focused on how do we create an environment where, as investors, we know that who is managing the funds is financially material. We know this. So the fact that we are now hearing organizations say that this is their privacy concerns, it's just not intellectually honest for those of us who've been in the business, who are doing this work, who know that one of the first things you do in terms of whether it's private equity or even public investments is it's all about the people. You want to know about the people. You want to know what their background is. What is their investment expertise? Because you're looking for what are possible sources of cognitive diversity. So again, I think it's important for us to stay on as a system and, as an industry, it needs to be clear that we all know this is financially material information that we need in order to really do our jobs appropriately as investors.
And
Fair enough, Avi, thanks.
I'll say one last thing, which is all the firms are named, including the 3 who used to do it and aren't in the letter. So what we'll do is, as a follow-up for everyone who joined today, we will make sure that we get out to you a copy of the letter. And I think we can start to wrap up. I'll just pull up a slide showing next steps, and then I'll actually hand it over to Josh to close us out. But please, want to make sure we leave space for any final comments or questions from folks. So this is my email address. This is Ivy's email address. You can email either of us. I'm sure you can email Josh or Lucas too, if you know them better, and they can forward any questions or comments you have to us. We hope you'll sign the letter. We will send it to you, and we'll send you a link directly to your inbox to sign. It just takes about 2 minutes to fill out the little, very short form. Check us out on LinkedIn if you want to follow the work. There's another QR code here. I also put the link to the website in the chat. Again, you can request a copy of the letter. You can sign on directly. I'll pause for any final questions before I hand it over to Josh, but just thank you guys for taking your lunch break with us, for those of you on the East Coast, on a Friday.
So, okay, and if there are any last questions, put your hand up or put it in the chat. But I want to, first of all, thank the team from Diverse Investing Collective for joining us today and for your important work. And a big thank you to Lucas and others on the call for supporting and for joining us today. I think you heard, ICCR, this is a core issue for ICCR for a number of reasons. Obviously, we're very committed to diversity, equity, and inclusion and racial equity. But also that we see this effort as fundamental to the broader work that we do. You saw data on the webinar that diverse voices in investment teams lead to better returns. But this is fundamental to our work, is also trying to push companies to do better. And when we're able to push companies to do better, that minimizes systemic risks that can impact returns and negatively impact people and planet. And so this is about the work that we do at ICCR to really push companies about the negative impacts they're having on society, the systemic risks that they create, and really push companies to do better. And this impacts, as we all know, our portfolios, but also this is fundamental to the issues that we care about. More generally, the institutions that are part of ICCR. So there's a strong case to be made, I think, for all of us, that diverse investment teams are critical, not just to improving returns, but really to improving the practices of companies in the world and their impact on people and communities. And this is what brings us all together at ICCR. So very happy to be working with Diverse Investment Collective on this project. And on this journey, because this is a journey. Really encourage those of you, thanks to those of you who have signed the transparency letter, and encourage those of you who haven't yet to give it a strong look and to consider signing, because after all, transparency and disclosure are really sort of fundamental building blocks for all of us in the work we do. and look forward to continued conversation on these important issues. So again, thank you to all.
Thanks, Josh. I think we'll stay on for a few minutes in case anybody wants to, and we'll actually stop recording